Resource means when we are talking related to financial institution, the resource which is actually accepting a deposit. Of course, you are investing means either you are going for investing a capital market or money market, so there is a risk. The banker main functions is an accepting a deposit. Okay, after accepting the deposit from the individual account holder, so the same amount is going for the lending for the needy people, those who want credit facility. Post Independence Day, only public sectors are operating. Now, which is the private sectors also, they are coming forward. Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in commerce, Vidhyaashram First Grade College, MYSURU, the Temple of Excellence. We are in the Unit 1, Session 2, Financial Institution and Market, 5th semester BCom. The chapter name is the Financial System in India, and today my agenda, you will get to know the structure of Indian financial system, how it is operating, and the role of Indian financial system. Okay, the functions of Indian financial system and the development of Indian financial system, moving forward one by one. So here, when we are talking related to the structure, how in India financial system is working, so which is completely coming under the Ministry of Finance as well as the Ministry of Consumer Affairs. Okay, so here the Reserve Bank of India, under Reserve Bank of India, so there are classification by 4 category. One is commercial bank and cooperative society and other institution. Okay, under commercial bank, we majorly classified into 2 sectors, like a public sector and private sector. Under public sector, so again which is further classified into for 5 category. One is State Bank of India and Associate Bank, Nationalized Bank, IDBI and Regional Rural Bank. Okay, now here when we are talking related to nationalized bank, so we know the era, the evaluation of banking system, how it is changing day by day or year wise, the century wise. So in the economic reform, when we are talking, the first in the year of after getting the independence, there are 14 major banks nationalized on 19th July 1969. Okay, again further which is nationalized for 6 major bank. Okay, 15th April 1980. So when we are talking related to private sector, because of liberalization, okay, now actually the under the finance minister Manmohan Singh, okay, so now which is completely deregulations. The first one under private sectors, we can further classified 3 categories. One is foreign bank in India. The headquarters is located in the abroad, okay, but operations will be going within the country. So which is directly monitored or regulated, controlled by the RBI and other Indian banks. Okay, non-scheduled bank. So bank means we are majorly classified 2 categories, scheduled bank and non-scheduled bank. Okay, so these are the things which is coming under the commercial bank. When we are talking related to cooperative society, okay, the cooperative society, which is also under the guidelines of RBI only, which is controlled or regulated. So here state cooperative bank, again which is central cooperative bank, state cooperative bank and central cooperative bank. So under central cooperative bank, majorly we classified into 2 category. One is primarily agriculture credit bank. So because agriculture is very important, so the government of India state-wise, central-wise, they want to promote agriculture product, of course, which is going for the primary activity. Again, primary agriculture credit bank, so the farmer service society, because the farmers are expecting too many benefit or facility. Okay, so obviously which is service provided to the farmer. Again, central cooperative bank, primarily urban cooperative related. Okay, so moving for the under cooperative society, state and development bank, which is majorly targeting for the state-wise individual state, how the development activity is going on. There are different types of cooperative society we are able to identify. And here the central and development bank, central land and development bank, okay, and primary land development bank. So these are the 2 category we are majorly talking. And coming to the other institution in coming slide. So here under other institution, so we classified we have identified there are three types. One is government purely, which is operating government. Okay, one is National Savings Corporation, Post Office Saving Bank, and Employee Provident Fund. So each and every corporation or bank, so which is operating with the help of guidelines. Okay, and next one, the public sectors majorly, which is completely public sector, Life Insurance Corporation, General Insurance, United Trust of India. Okay, and direct institution, which is a guarantee creditor. So the industrial, how their development industry, so which is related to, and ECG, Exim Bank, IDBI Bank, IFC, NABARD, state, each and every state having a state finance corporation. Okay, so next one, SDCI, yes, and AFC, and SIDBI, SEBI, and STCI. So again, we are talking related to the private sector. So the CHIT, NIDIs, corporate bodies, hire purchase company, investment companies, merchant bank division, leasing company, stock exchange, finance company, credit rating agency, depository. So these are the structure we are able to, we are getting a more clarity about this. And moving for the role of Indian financial system. Again, what are the major role? Okay, so where exactly they are focusing. The first one, the resource allocation. Resource means when we are talking related to financial institution, the resource which is actually accepting a deposit. Okay, the savers, you as an institution, they want to mobilize the saving from the individual or businessman. So which is a resource allocation. Okay, from the individuals surplus you need to pool. Okay, wherever the necessity is there, finance support is required. So here we are finding investor as well as savers. Okay, the financial system efficiently allocate the financial resource from the saver and borrower. Borrower means actually they are getting a loan facility. Okay, for the different activity. I'm moving to the capital formation, because any business or any company, if you want to start with the help of capital fund, how your investing fund, how you can raise your fund, which is a capital formation. So all the form of business which is required for capital formation is very important. It promote capital formation by encouraging saving and investment. So easily with the help of money market or capital market, you can raise your fund. And now next one, intermediations. Obviously, which is playing a crucial role. They play a crucial role in accessing a creditworthiness and managing a risk and providing financial service. Because as an investor, if you want to invest any specific financial instruments, okay, obviously there is an intermediations is required. Intermediators are requiring. And next one, the payment system. How the complete payment system coming under the Indian financial system. So the financial system provides secure and efficient payment mechanism through various instruments. Now digital mode, okay, or using some instruments. So they are trying to do the payment transaction. And the risk management. Obviously, money market or capital market means there is a lot of risk involved. Okay, so the risk management, which is related to the portfolio, it offers a range of financial product and service for the risk management. Okay, next one, capital market development. Because if any country want to develop, which is completely depending on the finance resource, so which is when we are talking related to the capital marketing development, which is coming under the direct Security Exchange Board of India. So here the Indian financial system play a pivotal role in the development of capital market, including equity and debt instruments in the market. So moving forward, for the functions of Indian financial system, how it is operating, what are the major functions they are which is involved. One is a resource mobilization, because you need to pull the saving from the individuals or businessman. The same resource, whatever you are expecting from the the small saver or businessman, which is going for the productivity activity like production purpose, purchasing equipment for the businessman. Okay, so one of the primary functions of the Indian financial system is to mobilize saving from the individual entity to the economic. If you want to talking related to the economic, because the number of industry are depending on the finance resource, either small scale or medium scale, everything which is connected to the finance, right? So you have to take a proper step here. And intermediation allocations, again the same points are repeating here. The financial intermediators such as bank is in a bank acting as an agent, okay, and non-banking financial companies. So non-banking financial company, whatever the activity which is going under the banking activity, so which is not directly related to the non-banking financial. For example, if you take Muthoot Finance, with the help of gold, there you can, as a customer or consumers are getting a loan facility, okay, act as an intermediary between savers and borrower, because the saver, even any investor, any saver, if they want to invest money for any specific instrument like a financial instrument, so you are selecting a right agent or mediators. Next, allocation of fund, because allocation of fund, so the fund is involved for everywhere now, which is a long-term basis or short-term basis, your working capital, everything, the businessman, depending on the fund, how you are allocating. So the financial system allocate this mobilized fund to various sector of the economy. So we are not only focusing one specific sector, each and every sectors, the finance is very important. So the allocation is properly done. And the risk diversification, of course, you are investing means either you are going for investing a capital market or money market, so there is a risk, okay. So help to individual and business diversify and manage various financial risk, including a life insurance policy, health and market risk. You cannot predict so many risks, systematic and unsystematic, so that's what we are trying to find out, the financial system, okay. And here the payment settlement, there are too many payments are going day by day, either which is related to individual or businessman, okay. So the mode of the payment, how it is done, okay. So with the help of financial institutions only, this include user payment system like national electronic fund transfer, real-time gross settlement, and unified payment interface, and digital wallets. You using this right platform, okay. Now the individual people are going for payments, okay. Now credit creation, obviously now everyone are expecting a credit facility from the financial institution, either which is related to educational loan, or if you're purchasing a property, so either you're purchasing for the domestical appliance, okay, what and all, everywhere you can find a credit facility. So they create credit to accepting deposit. So obviously, as an individual opening an account, either saving account, if you're talking related to businessman, they are opening an account called current account. So the banker main functions is an accepting a deposit, okay. After accepting the deposit from the individual account holder, so the same amount is going for the lending for the needy people, those who want credit facility, okay. And extending loan to individual and businessman, the various loans are available here, offered by the institution, okay. Next one, regulation and supervision. Here when we are talking related to the financial system, either we are banking related or non-banking related, which is directly regulated and controlled by the RBI. If the stock marketing, capital market, when you are talking related, Security Exchange Board of India is controlling or taking a regulation steps here. And the financial system subject to regulation and supervision by the government agency like RBI, SEBI, and Insurance Regulatory Development of Authority of India, okay. If you are talking related to the pension fund, so Regulatory Authority of India, so everything which is coming under the financial system. Okay, moving to the development of Indian financial system, how each and every stage, a century, okay, we are finding there is a lot of improvement we are finding here. So when we are talking related to pre-independence day, which is called the colonial era, so under the British rule, foreign institution dominated Indian financial landscape. So majorly before independence day, the foreign institutions are controlling completely. And next, after post-independence day, the time is 1947 to 1990, there is a lot of improvement we are finding. So India pursued a plan economic, because they are stepping into the proper planning, okay. And next, leading to the nationalization of bank. So just in the previous slide, in the structure of economic, there is 14 scheduled bank, 14 nationalized bank are in the year of 1969, okay. Again, which is going for extended 6 more nationalized bank. major bank and insurance company also came into picture. And economic reform, when we are talking in 1991, which under the guidelines when it is the Prime Minister Manmohan Singh, okay, so they implemented liberalization and deregulation open to the economic, attracting private and foreign investment. Till to post-independence day, only public sectors are operating. Now, which is the private sectors also, they are coming forward. And modernization and diversification. Modernize, complete the banking system or financial systems are completely modernized. Okay. So, a new financial instrument. There are too many instruments we are finding in the modernization. Regulatory body. So, because we have major SEBI, RBI, okay, IRDA. Okay. So, there are different regularity bodies, okay, and the market infrastructure transferred to the financial sector. So because the market basis only, the industry are raising the fund. Inclusions and digitalization, which is completely initiative for the Prime Minister Roger, okay, and digital banking extended the financial access. There are too many benefits are added, okay, and even the regulatory reforms like a regulatory body evolved for addressing emerging challenges and insolvency, bankruptcy code, expecting the insolvency resolution. So these are the major developments we are finding, and keep on watch for next section. Thank you.